I'm saying don't look at the wrong data. If gold and silver are staying more or less where they are and your share prices are going down, there is a divergence between value and price.
We mentioned before we started recording, you mentioned that you are seeing, it seems like people who are investing in gold and silver mining stocks a bit concerned and a bit confused why they're not holding up with the gold and silver prices. What do you think the sentiment is looking like, if you want to just share that with our viewers?
Right. So this is sort of groundbreaking news here. You're the first to break the story. I'm thinking about this. I'll be writing about it in this weekend's free digest. Quick plug. We don't spam readers if you sign up for the free digest. But there's really something quite notable. It seems to me that it's the mainstream investor that should be panicking now as the signs of recession rear up. They should be worrying, that the captain of the ship there, Mr. Powell, maybe his charts aren't quite right. Maybe he doesn't know how, what's under the waterline there. Or rather, we know that he doesn't know. He says that he doesn't know. He pads in his testimony. He pads the things. He doesn't say, oh, I'm guaranteeing a soft landing. He's always very careful. So the excuse is already there. If there's no soft landing, he'll say, well, we said it was difficult. We were just trying for that, but we said it would be difficult. Like, that's already planted. I think mainstream people ought to be very worried by that, much more than they apparently are. But what I'm seeing is, and I'm getting this in my Twitter feed and other social media and in direct email, is this enormous concern on the part of gold bugs. Honestly, I feel incipient panic, like something is wrong. Like, why are my shares down so much, especially if gold is holding up? Well, I can't fully answer that, but markets are emotional. Markets tend to overreact both to the upside. They overshoot, they get oversold, undersold. And that's why there are opportunities for speculators. That's the nature of the market. In this case, I think it is a mistake to overweight your own pain, to consider your pain in your portfolio as the most important indicator of all markets and what's going on. In fact, your personal suffering is completely irrelevant to Mr. Market. He doesn't know, he doesn't care. The universe doesn't listen to our portfolios and whether in the red or not. And I'm not just saying, buck up, stiff upper lip. I'm saying don't look at the wrong data. If gold and silver are staying more or less where they are and your share prices are going down, there is a divergence between value and price. And that never lasts. I mean, it can last for long, but not for long. And so what do you think is going to happen? Is gold going to crash? Is gold going to 1,000 again, or breaking under, say, 1,700 would be scary? Do you think that's likely in an environment where we still have profoundly negative real rates, where we have prospects for stagflation that nobody's talked about for decades? I just don't see a huge amount of downside, or even a major or a substantial amount of downside for gold. I think the worst case scenario for gold is it keeps fluctuating sideways for a while. I may be wrong, but that's how I see it. And therefore, the gap between value and price means that price will come up to value rather than value drop down to price. I do not see our stocks as a leading indicator is what I'm saying. I'm seeing panic, potentially capitulation. And if that happens, then I could end up buying everything on my shopping list. And we'll see whether that works out or not. But if I have that opportunity, I will experience joy, Elijah, not panic. I will be delighted to take stocks off of weaker hands. And even bullion, if I get a chance, if the gold and silver do fluctuate short term on a crash, I'd be happy to stock up on my bullion. Can never have too much of that. So, breaking news, for whatever it's worth, I'm not the New York Times. I'm not the Wall Street Journal. I only have 16,000 very best friends. But I am sensing panic circulating in our community, Elijah. And if that results in irrational selling, I think it could be an opportunity for those who have the discipline to follow through.
And what we like to do on this channel is help people be aware so that they can be prepared. So how you mentioned that a lot of people are going to panic in this situation. And we are seeing a lot of that even now in the mainstream media, right? It's like people are panicking about the stock market. What is your strategy going forward if you want to kind of reiterate for our viewers to not panic, but to be overjoyed, right, when the opportunity arises to possibly add to your position?
Sure. Well, clearly with bullion, there's no reason to panic, right? If it gets cheaper, I just buy more. That's long-term savings. I don't speculate on bullion. I don't buy gold or silver because I think the price is going up. I buy it because it's gold or silver. I can hold it in my hand. And in case of urgent need, I can always sell it. It's that insurance play, right? So price is irrelevant to that other than as a buying opportunity. As far as the stocks, the leverage to gold and silver bullion or any other metal, then kind of like my story about tech going on sale, right? I'm not worried about tech just suddenly disappearing. So if any company, I think, really has the goods, right? They have a highly profitable mine, or they're one of the bigger, more well-run companies, which normally I don't invest in the bigger companies because I'm looking for more hockey stick gains. But at times like this, those are stocks that I'm much less worried about. I don't need to throw out names. You all know who I'm talking about. The biggest and the best in the royalties and in the minings, in whatever your favorite metals are. If you can see something that you're not worried about it drying up and blowing away, not some fly-by-night junior, and it goes on sale at stupid cheap prices, then that's how you don't worry. And if you own that already, by the way, I'm not selling anything yet still. I'm still, I think, in quality positions like this, so that if we don't get the meltdown, but if the powers that be reignite a reflationary bubble instead, then I didn't sell low, right? And so I can still benefit. But if we do get the crash, then I would average down on some of the, many of the stocks that I already own because I have this belief in them. As far as the smaller companies, the key thing to look out for, this is hardcore advice here, is look at the cash balance. Any company that doesn't have the cash in the bank to weather at least a year downturn, ideally 2, is probably not something, let me not mince words. I don't want a company like that in my portfolio ahead of a potential major drawdown. And I actually don't think we would see, at least in gold and silver, like base metals could last longer. But if we get a crash in gold and silver prices because of a big market panic and the liquidity, event kicks in, I expect that to be short. So, my cash in the bank requirements for a gold and silver play is a little bit less. But even there, pain goes on longer than we ever wanted or expected to. So at least a year's cash in the bank, ideally 2, is a way to sort the wheat from the chaff on the juniors.